Hello and welcome to Pro Trader Strategies Market Commentary for Monday, May the 7th. Hope everybody survived Cinco de Mayo. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical market analysis. Please take a moment to read over this disclaimer as it talks about everything that I say in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't even know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Across the pond, not really a whole lot coming out today, other than we did get factory orders out of Germany. Came in at negative 0.9%, expected to be a positive 0.5%, so a little bit lower than expected there. And then European Retail Purchasing Managers Index came in at 48.6, no real reading there. We also have Bostic speaking again and Birkin speaking today, FOMC members. And then basically that's about it for our economic data point. Let's get on to the overall markets. Crude oil breaking the $70 a barrel mark, trying to get up to my Fibonacci 61.8 Fibonacci level, which is the $71.18. Big psychological level being that of the $70 handle. So we haven't seen that in quite some time. As a matter of fact, we could probably look back on the data points and see it's probably been quite a few years since we've seen that. It's not even 3 years since we've seen $70 a barrel. So quite a while since we've seen that number. Gold futures still in positive territory despite the fact that we're seeing equities move higher. We would think that the dollar's gaining strength, equities moving higher would lose a little bit of luster for the gold, causing that to maybe take a bit of a downturn. It's really finding a lot of support on this 200-day moving average. As you can see, the last several days, almost every day last week, we came down and tested that number and bounced up and away. So it's going to be the bulls and the bears fighting it over. The bears are going to try and get below the 200-day moving average, and the bulls are going to struggle to get above the 78 Fibonacci level. So that is going to be a key line in the sand today. I'm under the mantra that it is going to roll over. We're starting to see some weakness in Bitcoin futures with this topping pattern right here. We've got basically a double top right there, right around that, what is that, 98.16 area-ish. But today, confirmation to the downside and kind of bleeding right through this 23 Fibonacci level, right back to the point of control. 9-day moving average will act as support because it's lined up mostly with the 23 Fibonacci there. But again, I'm still expecting Bitcoin to roll over and test that 58.80 area. I just think it has to go down there and test that sometime relatively soon before we can get that move to the upside. Bonds seeing a little bit of weakness today, down about a half a point or so, basically just as the equities are moving higher. VIX slightly higher, but we can see that with the Dow Jones up 200 points today almost, that the market is in full rally mode in a sense. It does look like it's finding a little bit of resistance on that 50-day moving average. But if we look at the NASDAQ, it's peeled through all of these resistance areas. Even on Friday, it looks like we basically settled just above that. So pretty much out of the woods for NASDAQ. And it looks like it could go up and test that 7,000 relatively easily this week. You know, as long as no bad news comes out. And the E-mini S&P is trying to get through its 50-day moving average. But as you can see, Friday got through most of the resistance to the upside. So today, a little bit easier other than that 50-day moving average yet to get moved. And of course, the SMA is not lining up the same as we would see on a daily chart because it's taking into account each candle. And therefore it is a little bit lower. So you can see Fibonacci's are still in the same places though, but peeled through a lot of this area of resistance on Friday. So pretty much out of the woods there too. And then let's look at a couple of things that I did. I talked about this trade in Friday's webinar. I was doing it on short puts, and when I was going through and vetting some of these stocks for this particular webinar, I came across SBUX. Well, I couldn't really wait. We look on Thursday, we had a bottoming pattern, came down, touched the 23 Fibonacci, which was pretty close to a tweezer bottom. Then Friday, the rally up, confirmation. Today was even, looking really nice, to be quite honest. As a matter of fact, at one point I was thinking about covering these already. But I put this trade on Friday as we got the confirmation and I was getting ready for the webinar, like I said. And I went into SBUX and did the June, sold the 55 puts, that's the June weeklies, for 50 cents. You can probably get that trade off right about where I got in at this point today, because we're seeing volatility go up a little bit, as you can see here. It's not quite at the location that I put it on at, but because the volatility is going up, those premiums are getting higher. So you can probably, in a sense, get it at better levels than where I did. So sold those 55 puts for 50 cents in my margin account. Didn't do anything in my IRA yet. Caterpillar I added this morning though, and went in and did the June, sold the 135 puts, so that gets me down below this Fibonacci level. So you can see I've got a lot of support, this extension that acted as a tweezer bottom, the 200-day, and I've got 2 lines of Fibonacci to contend with to get down to that level. So I decided that was a pretty good opportunity for this. So I sold those June 135 puts in there for $1.28. Haven't covered anything, but that's what I've done so far. And that was based on all my rules for that webinar. So if you didn't watch that webinar, go check it out, because right now, the way we've seen that the equities are setting up, we are starting to get a little bit of a bull move here. So it is the perfect scenario, the perfect environment for a lot of these stocks like SBUX and Caterpillar don't have earnings and still have high implied volatility that we would expect to come out, happening right now. So go check out that webinar at protraderstrategies.com. And while you're at it, sign up for Friday's webinar. It's going to be another really great one. Been getting a lot of compliments and good feedback from you guys, so I appreciate that stuff. Keeps me on task. Also at the bottom, give me a thumbs up, thumbs down. If you give me a thumbs down, tell me why. Tell me what I'm doing wrong so I can help out and change some things, all right? So protraderstrategies.com, get on that webinar. Check it out. It's going to be really important going forward. And that's all I got for you today, other than if you can't take that, take it easy.